My team, for choice, thinks 2023, we avoid a recession. To truly conquer inflation here, we're going to put unemployment somewhere with a mid-4 handle, and I find it hard to believe we're not going to have a recession at that point in time.
Ken Griffin, founder and chief executive officer at Citadel, discusses the state of the U.S. economy, inflation, and Federal Reserve policy. Griffin shares his thoughts about the collapse of FTX and his outlook for the cryptocurrency industry. Before listening to him, please ensure to smash the like button and subscribe to the channel.
What I want to know from you, Ken, is what do you make of the spectacular collapse of Sam Bankman-Fried's FTX?
Well, okay, so big picture, the crypto market cap today is a fraction of what it was when we first started talking about it. So crypto's not...
It was $3 trillion and now it's well under $1 billion.
It's like 800 billion, of which a big part of that's stable coins, right? So you really move back into a world of Bitcoin and Ethereum as the two dominant cryptocurrencies, both of which actually happen to be CFTC regulated. Look, FTX is one of these absolute travesties in the history of financial markets. I mean,
people will lose billions of dollars collectively.
People are going to lose billions of dollars. And that undermines trust in all financial markets.
But was the fundamental problem that it was a business built on cryptocurrency to begin with, or that it was a business that wasn't adequately regulated, or that it was a business that the venture capital and other investors who put money into FTX didn't adequately, diligence? What's the fundamental problem?
Well, I think the fundamental
issue... Or was
it
just fraud?
So first of all, that's a really big choice of words to use, and I can't go there at this point in time. But what we do know is the balance sheet shows a giant black hole. And there's no doubt that customer assets were used to make investment decisions in favor of FTX's shareholders, which didn't work, at the expense of the customers. That's not permitted in American broker-dealers. You can't just use your customer assets to go engage in proprietary trading. That's a huge no-no.
It's a no-no in most parts of the world.
It's in most parts of the world, and that's a good no-no, to be clear, too. All right, so FTX, billions of dollars have been lost here. The confidence, though, of a generation in financial markets has also been shaken. And that's really awful because the 20-some-year-olds to 40-year-olds who are so engaged in crypto, they've got to save for their retirement. And if they don't believe or trust in financial markets, this is a huge problem. They need to own stocks. They need to own corporate debt. They need to partake in our global capital markets. Now, with FTX, there are a few points here that we should talk about. The turf war by American regulators has got to end. It's just preposterous that without naming the agencies, they all dance around who owns what, and the bottom line is American investors have really gotten hurt here to the tune of hundreds of billions of dollars in decline in market cap and crypto over the last 2 years. I mean, that really strikes at the entire core or essence of what's investor protection all about. The second is that FTX crosses into a zone that all of us are worried about. On the balance sheet of FTX is a line called Trump lose. And Sam was the second biggest donor to Democratic candidates. State of the world right now, there's been two big debates. Are we heading into recession? And what's the trajectory of inflation? And of course, the two are intertwined. I think we've been a little bit out of consensus. We have felt that we would not have a recession this year in 2022. And in North America, that's borne out to be true. We're highly confident we're going to finish this year on a modest growth note. Now, the issue, of course, is 2023, when the lagged effects of the Fed having increased rates will really start to grind on the economy. My team, for choice, thinks 2023, we avoid a recession. I'm a little more skeptical about that. I think that for the Fed to truly conquer inflation here, we're going to put unemployment somewhere with a mid-4 handle, and I find it hard to believe we're not going to have a recession at that point in time, sometime in the middle to back half of 2023. So a little bit of internal debate, and frankly what makes Citadel so special is we have these debates endlessly. And it pushes all of us to think more critically about our perspectives, our views, and of course, ultimately the investment decisions that we make. On inflation, we think we've seen peak inflation. Now, owner's equivalent rent, which is a big driver of inflation, because of the way it's calculated and estimated, we'll see that continue to show inflationary pressure for the next few months. But spot rental rates appear to have peaked in many metropolitan areas a few weeks ago. So we think that one of the biggest drivers of consumer prices, which is rent, has reached near-term peak. And then energy prices are likely to roll over in 2023 as compared to their 12-month prior. So two of your really big drivers of inflation, energy, rent, we think we've seen a peak in. And then across goods, we think this is going to be a really good holiday season for consumers because American companies have built up such a substantial inventory of goods that they're going to need to sell here heading into the holidays. So we think we're going to see pretty good pricing for consumers as goods become very attractively priced to move them out of warehouses. Now, why is that? Obviously, in the pandemic, you couldn't enjoy services. You couldn't take a vacation. You weren't getting a massage. You weren't going to dinner with friends. So you bought a lot of goods. I mean, I can't imagine how many flat screen TVs were sold to Americans in the pandemic that are, frankly, not used nearly as much today as they were a year ago. So this shift from a goods-based economy to a service-based economy is going to create this depreciation in pricing of goods, which of course will help bring inflation down. So we think the inflationary path has peaked. We think by the end of 2023, our central view is inflation will be back to roughly a low to mid twos range, which is a dramatic change from where we are today. Like, it's not yet time for us to change course on our monetary policy. We want to see that we put the inflation genie back in the bottle. We've endured a ton of pain in getting to this point. The housing market is definitely under duress. Durable goods sales are under duress. High-ticket items are just out of reach of consumers today, but we haven't gotten the job done. And to take the foot off the brake right now and not finish the job, I think is the absolute worst mistake the Fed could possibly make.
Why? What happens if they, again, back off too early? If you take only 7 pills instead of 10, what are the consequences for the U.S. economy and for the global economy furthermore?
So the biggest concern is you on-anchor inflation expectations. So right now, the American public believes, and not as much as we'd like, but the American public believes the Fed's going to get the job done. If we take the foot off the brake, we don't finish the course of antibiotics, and inflation starts to flare back up, the Fed will have lost credibility. If the Fed loses credibility and inflation expectations on anchor, then the amount by which we'll need to raise rates and deter economic growth will be a much bigger bill to pay. And we shouldn't put ourselves in a position to pay that bill. We should get the job done now. The United States has no ability to produce anywhere near the number of semiconductors it needs to run its economy. We are utterly and totally dependent upon the Taiwanese for modern semiconductors in America. Now, you could argue that by depriving the Chinese of access to semiconductors, we actually up the ante of the risk that they seize Taiwan. So it's not necessarily clear that we get the outcome that we want by depriving the Chinese of this technology. They could resort to other methods to secure this needed technology for their economy if they so choose. We're playing with fire here. Like, let's be very clear. Semiconductors, if we lose access to the Chinese or the Taiwanese semiconductors, hit the US GDP is probably order of magnitude 5 to 10%. It's an immediate Great Depression.
Those are big numbers.
Those are big numbers. So the CHIPS Act, really important. Encouraging STEM degrees in America, really important. But what worries me is this sense in the halls of Washington that the West has a God-given right to be superior in its technological prowess when the facts would argue to the contrary.